now. So I want to welcome everybody to the this Friday, the 19th of September, is How to Make Money in Stock, How to Make Money Trading Stocks, Market Stock Talk Show. David Grandy is with us again today from All About Trends. Hey, Dave.
How's it going, Dennis?
Hey, it's going good. Yeah, good. It's turned out to be a good Friday. I hope everybody is taking the appropriate steps to, if you are up in a position, just in case things turn ugly, to lock in some profits. And of course, I'm Dennis Wilborn from All About Trends. We're going to get right down to business and roll through everything so that we'll have time at the end of the show to look at some stocks that you want us to look at. And so let's go, Dave. I want to remind everybody that all the materials we present are for information and training purposes only. And we always encourage people to start out paper trading any new method prior to risk of personal capital. David and I will be doing the basically we're calling it the Art of Trend Trading, or it's How to Make Money Trading Stocks. On the 7th of October, we will be at the Englander Sports Bar, Pub. They have really great food, and we're presenting to the Bay Area Stock Options ETF Investors Meetup. And the organizer is Bobby Sharman, and David and I are really looking forward, and if you can make it to that, come on out. I do not think that one's going to be recorded, David, do you?
Probably not.
Okay. And so this will be, I want to thank the folks who have been making some suggestions, recommendations for groups that we can be presenting to. We actually may be doing a road trip down to Santa Monica, who knows, and see what's going on in Southern California. If we can stay out of trouble with certain big institutions, or if I can stay out of trouble with certain big institutions, right, Dave?
Right.
So we love to talk about stocks. So if you do have a group, we can actually beam in via webinar and make a presentation to your group. I know I'm looking forward. I'll be in October. I'll be in Hawaii in October, and I'm going to get to chat with a group that's over on Oahu. And so I look forward to that. That's going to be a lot of fun. And so I'll be presenting those folks who are sipping on their umbrella drinks. That sound good, Dave?
That's always a good thing, Dennis.
And you're probably wondering why Dave's not invited. Well, I mean, he actually is invited, but he has to pay his own way over there and all that kind of stuff. But who knows? We're going to see what happens this next year. We're real excited about it. Here's everybody is so excited about Alibaba, and I know you and Harlan went out and bought like 1,000 shares today, right?
Right. Sure. No.
I think one of the best quotes I saw today about Alibaba was basically, for the past few weeks, the financial media has not stopped talking about, so we didn't want to stop talking about it today. But this particular commentator really makes some good points. His biggest concern is that the retail trader / investor is going to get screwed. Anyway, it was a pretty good article because they have been brainwashed that this will be the greatest IPO ever, and they have to buy it. And I put up, here's the chart of Alibaba right here. And I want to emphasize this is not a pattern. Basically, it is a one-day. Now, hey, give it some time. Some of these IPOs start set up some really great patterns after a few days / weeks / months. But as you can see, I mean, all we know is so far today, Alibaba is traded from about $100 down to $90. And when I took the snapshot, probably about 9:30 this morning, it had fallen back down to the lower part of its range. And so, you know, the way we trade, I don't have to put on my resume that I owned Alibaba the first day, because that's not necessarily a good thing, because who knows? Some people might find out that this isn't the best thing since sliced bread. Now, if you did trade it, hey, that's cool. I mean, we're not criticizing or anything like that. At the same time, because there is no pattern, we don't get into it, right, David?
Right. Yeah, we talk about it week after week. We do what the charts tell us to do, and we wait for patterns. And we waited patiently for Facebook, and that set up very nicely, and we got several great trades off that. And so, what we're not going to ever do is rush out and got to have it, chase something because we got to have it, or we're going to miss out. We're afraid we're going to miss out on something. We're just going to simply do what the charts tell us to do, and it's like we're waiting at a bus stop. We're just waiting for the next bus to come along, and if there's no bus, then we just wait patiently.
Yeah, what I found, David, in the time that I've been trading is that the greatest trade in the world comes around about every 2 weeks.
Yeah, that's about right. I mean, we talk a lot about only the best and forget the rest, and if we have to squint, to see a pattern, it's not there. And whenever we get in that mode, the best place to be is cash, because people forget too that cash is a position, and cash sometimes can be your best position.
Yeah, and because some people may be wondering why we haven't gone heavier into this. When the market went back into uptrend, according to Investor Business Daily, why we didn't go heavier back into the market. And one of the reasons why we didn't go heavier back in the market is that either the setups weren't there, or with this wide and loose market that's been lately, we just there's just not been any really great entries. And so, speaking of that, when I first started writing this about 8:30 this morning Pacific time, things were really looking awesome for the market, David. And so basically, last week what was going on with the market was just kind of hanging around. There was very little motivation, and there was a battle going on between the buyers and sellers. Earlier this week, it appeared as if the buyers had won. Excuse me just a second. Sorry for the dead time. I had to clear my throat. It appeared as if the buyers were winning. I mean, and we'll see on the chart where we really run up and made some new highs. S&P new highs, NASDAQ new highs, really close to some of the mid-year highs back in 2000. Russell remains the weakest link, and we'll see today with the chart what's going on there. And then outside earning influences, we know that there's a lot of international things that are going on. If we get all bogged down with that, we can wind up going, yeah, the world's kind of a scary place right now. And at the same time, we have the question, I think, and this is my opinion, that the September effect is still in play, and that we may see some more softness before we solidify and get a bounce going into the latter part of September into October timeframe. Again, that is based on historical information, and we'll see if it works its way out on the chart, because as we know, that opinions are like belly buttons. Did you get that, Dave? No.
I did get that.
Okay. Here's one of the indicators that I like to use, and as we saw, this was the percent of stock of the NYSE above the 20-day moving average. Last week, we were starting to fall down, continuing to fall off the high, but all the time this was actually falling. The NASDAQ and the S&P was basically moving sideways, working off their overspot condition. We broached the lower level this week. On a short term, this turned out to be a nice little bounce. When I took this snapshot, the percentage of stocks above the 20-day was up about 45. However, it has since fallen down a little bit. We'll see where it ends at the end of the day. We may get one of these situations like this where we get a bounce up, pull back to a deeper level, which then sets the stage. David and Harlan talk a lot about setting the pins. It sets the pins back up for an even larger, more significant move, which tends to happen towards the end of the year. So let's take a look at the charts. And as I'm moving over to the chart of the S&P, things went from good to worse regarding this. Towards the end here, we'll be asking for potential stocks you want us to take a look at. Just when you type the ticker symbol in, let us know if you're already in the stock, where you got into it, or if you're looking to buy, looking to sell. And so what is the SPX telling us here? It is basically we had a nice breakout to a new high. And that happened yesterday. And we basically get a bounce up, a little bit of a gap up, run up. And so we would kind of like look at this as being a pop and drop type of pattern. Where are we moving? If the habit of what's been going on with the S&P continues, what we would anticipate is for it to drop back down to prior support. That support is still at the 1991 level, and also the 50-day moving average coming up is where that support is. So we could look for potential, either we could stop at the 20-day moving average or 1991 and then a little bit of bounce, or we could stop at the 50 this time with a little bit of bounce. Or the bounce could look similar to this. We come down, bounce off the 1990, and the time when we put in the lower low, lower high, and then rolls back over, that's telling us we're going into a more significant sell-off. Will that happen during the month of September? We shall see. NASDAQ. Okay, NASDAQ this morning, if this candlestick stays in place for the NASDAQ, what we would have, this would be called a dark cloud cover, which is a candlestick reversal signal. This 4147 is basically one of the swing highs from 2000. There's another point above that. I hope it's still there. And it is, there it is. The all-time high in the NASDAQ was 4816 that was hit back in the year 2000. If we do get back up to 4147, it breaks through. It's pretty much clear sky the rest of the way up to that other resistance area. But the problem is we've got to get through that level. And right now we may look like we need to do a little bit more base building before we move back up. If we break the 8 and the 20 again, we are probably going to revisit this level down here at 4,000, or this support at about 4,015. So that's what's going on with NASDAQ. Still holding up, but we got a quicker turnaround than we had on the last little run up. The Russell is a completely different story, at least it was when I checked this out. Russell came back up to the 20 today, which also coincided with this downtrending and line, and so it's almost working within a downtrending channel now. And as you can see, that's a healthy sell-off. We hit and we moved, and the unfortunate thing about this is there was very little setup up here before it rolled over and fell over, and that's one of the challenging things in getting into a position on the Russell or TNA because of this herky-jerky big moves and just no real good orderly setup. So David, that's what I'm seeing in the charts. I mean, The Russell looks like if it has now dropped back below the 50, and so we may be on our way with the Russell. If we break this low at 1141, it appears that we could probably set in our sights that retesting this support zone that runs from 1082 up to 1107. And but that's what we got for the for what's going on in the indices. And so, Dave, are you ready?
I am ready.
Okay.
Nice job, Dennis.
And
let's see.
You have the screen.
Okay, so yeah, it's just been kind of a quiet month so far. I mean, it's been very big daily trading ranges in the indexes, but just hasn't been a whole lot of great setups for us. So, but we did manage to take some, and we talked last week about the markets pulling back, and that this was our time. This is our time to profit, and we did that. So we took 4 trades, and we locked in gains of over $1,150 from those trades. Not exactly a home run, but we just take what the market gives us, and we've talked a lot about that. Where there's some months where you have blowout months, and there's other months where it's just kind of quiet. And the key for us has always been consistency and just trading what we see and making the most of what we have, and never trying to force things. And we've talked a lot too about the worst thing you can do is try to force things and have like an income goal necessarily for the month, and then you're trying to hit that regardless of what's happening, because when you try to push for returns, it typically doesn't work out that well. So and the key is just really being patient and letting things come to you and then making the most of them. That's what we're doing. The markets are at resistance, so we're back to all cash, or as you would say, flat the market, Dennis, and we're just going to sit tight and let the pin set up again. So we made a little bit of money, and now it's just about being patient, and that's our trading plan. We just don't chase stocks. We let them come to us. We buy support. We sell resistance. We short resistance. We cover at support. We're just trading what we see, and it's been a pretty good, pretty good run here. There are our last 34 trades. 27 of those have been winning trades. So that's an 80% success rate. So, we just don't really feel the need to go out there and push. So, we're just going to keep doing what's been working, and we're going to talk about that now. So. Just a quick review here. You can see the indexes hit resistance today. Trend channel resistance on the S&P, the NASDAQ has lateral resistance, and is kind of leading the way down as we speak right now with the indexes. Like all of them now have gone negative. So kind of whether this is something big or not, I don't know. I mean, all we know is it's hitting resistance, and the odds favor a pullback here versus moving higher. So, and the reason we say that too is because we're just not seeing a whole lot of setups out there either that we can take advantage of right now. So, so speaking of setups, there's 3 things you need to know in the market: uptrends and how to trade them, downtrends and how to trade them, and change in trend patterns. The patterns we are seeing are all still on the long side, so that just suggests that this is, could be just a simple thing where we've hit resistance, and now we're going to back off from that a little bit and digest that. And remember, pullbacks are very healthy. They're not really fun to sit through if you're fully invested, but they are necessary for the markets to go higher. And it helps markets go higher. I mean, think about it. Institutions, big money, they're not going to go out and chase stocks that are super extended and chase markets that are super extended. They want to buy stocks that are at support, because they're the smart money, and that's what we try to do. We try to emulate what they're doing. So let's talk about some of those patterns. Uptrends, pull back off highs is our signature pattern. Stocks that are in clearly defined uptrends above the 50-day moving average, orderly low volume pullbacks to support. And this is Mobile Eye. As you can see, it broke out of a little consolidation here, I guess. Made a nice short-term run and is pulling back, and we've got multiple levels of support. We have the 20-day moving average here, and we've got lateral support and perhaps a trend line here. So a lot of support here. It's just a matter of how far is it going to pull back, and the further it pulls back to these levels of support here, that would be better, as there's more support there, and plus I think the index is simply just going to allow that to happen because they're just hitting resistance today, so we need to see a pullback for a little bit, which will help this stock here pull back as well. The other signature pattern we look for with uptrends are trend channels, and these are just really simple to trade. These are stocks that are also in confirmed uptrends. They have a clear support and resistance area because you draw a line connecting the lows, that's your support area. You draw a line connecting the highs of the uptrend, that's your resistance area, and you're just looking for those stocks to pull back to support. And we've talked about Tesla over and over and over again, and here it is again because it's setting up again. So you can see we have this trend channel here. You have your support here, your resistance is up here. It's, we had this nice pullback in this nice trade. We had another nice pullback, which led to a nice trade, and now we have yet another pullback. And we've got the 50-day moving average here. We have lateral support, and we've got trend channel support. So again, we love it when we see stocks that are pulling back to multiple areas of support. That really makes the pattern a lot stronger and makes us feel better about committing our capital. So those are two that we're looking at right now. We've got a whole bunch more on our watch list, but for now we're just going to sit tight. We're going to let the market reset the pins so that we can bowl for strikes. You just think about when you go bowling and you put the ball down the lane or whatever, and it knocks over the pins, and then you got to sit around and wait for the machine to set everything back up again and send the ball back to you. So that's kind of where we're at right now. We're waiting for the ball to come back to us and waiting for the pins to get set up. And we've got some good setups brewing, and we're just going to be waiting for that opportunity to take advantage of them. In the meantime, we have a 15-day free trial you can sign up for, and you can trade in tandem with us. You get a newsletter every single trading day. You get a more comprehensive newsletter on Sunday. You get analysis every day of what's happening in the markets from a technical standpoint, leading stocks. We have a watch list, all those patterns that I just showed you. We have lots of stocks that have completed those patterns. We educate you on those patterns, what we need to see to trade them, when we buy, when we sell, what our stop is. It's pretty thorough, pretty comprehensive. We want you to be successful, and to do that, you need to know what you're trading and why you're trading it, and that's what we try to cover in our newsletters. So it's a simple trial. There's no credit card or anything. Just go to our site, sign up for that, and you get everything our paying subscribers get free for 15 days. And that's it, Dennis.
Okay, David, I'll have to take myself off mute here. And thanks a lot. Yeah, several of the stocks that you're talking about, like Mobileye. Mobileye, we nibbled a little bit this week on breaking back up to the 8-day moving average, but it really looks like it's kind of, and also with Tesla, we've been doing a lot of base hits. No big home runs on almost anything over the past month, just primarily focusing on base hits. And with Mobileye, we nibbled a little bit, didn't work, and so it looks like it's going to come back down to around that 45 level, and we'll see if it gets back down there and bounces from there. And the essence of that very verbose response to you was just, to let everybody know, it's critical as you do your homework. Set up strategic price zones and/or price lines that of where a trade will become interesting. And with the current market conditions, let the price action go to that point before taking action, because it's so tempting to try to get in early, and typically that doesn't turn out so good. The active trend trading system, folks, we also, any market condition, we show and teach members how to trade in any market conditions. We follow 5 pillars that are listed here thus far. Since we began the timing service, we're up about $14,000. We're currently 20% invested. And I'm going to show you the makeup. Here are our profits for the month of September. And these are primarily, I want to show you as you're looking at this. Let me pop this up. As you can see, these are primarily just small, kind of ins and outs that would last for, maybe 5 to 7 days. So there's no huge, you can see, no huge big winners here. And I've done this primarily, I do show folks how to do some covered call, what I call turbo covered calls, turbocharged covered calls that are on stocks that have weekly options. And so for this is what the market's been offering here over the last month or so, since the 1st of September. And we have closed out a few trades, for the Capitol building. But not, I agree, Dave, not a bad month. But as you say, we're not chasing anything. And for the last month, it's, just been, take a little bit of a bite here and there, and a lot of base hits only. Here's what we offer is regarding the premium subscription and basic subscription. The premium is $49.99. You get about $300 worth of value out of that with the training videos and training webinars that we do. And then we are currently working on, and also we have actually launched the Power ETF alerts. They're going out now for the covered call strategies, the active trend trading refinement for the longer horizon. And we do I have folks working on the training courses for beginners and more. I've got some guys doing a back testing for some longer trading horizons. Mike Traeger, kind of my research collaborator, who lives in Dallas, Texas now, is going back and putting together his, we're looking for a word to call it, Traeger triggers. Mike trades about 4 to 5 times a year only, but when he does, he does exceptionally well by being very patient and waiting specifically for his, the signal he's waiting for. And so how many out there could handle only trading 5 times a year? That was a question. So anyway, Dave, that's all I have for today. And you got anything else?
No, I don't. I'm looking forward to answering folks' questions and looking at stocks.
Okay. Then with that, I will basically, folks, have a very great weekend. And I'll remind you, keep growing the egg. And as David said, are you guys invested at all right now? Are you totally, are you flat the market?
No, we just issued our last alert right before the webinar, so we're completely flat.
Okay, and I am about 20% invested right now, and that's primarily due to the Tesla trade that I'm doing, which I'm selling premium against Tesla. And it was very interesting on Tesla. Well, it's very interesting on Tesla. Goldman Sachs came out today and basically set a price target on Tesla of $210. And
wow.
That's got me kind of scratching my head. It's almost like, yeah, it almost sounds like the analysts maybe, if they could drive the price down a little bit, therefore they could get in at a little bit better price. I don't know if that kind of thing happens. But yeah, Harlan says that means Goldman Sachs wants to buy. This is how my inclination was correct. So anyway, folks, trade wisely, trade profitably, and here's David's information. There's his phone number, there's his email, and of course here's my phone number and my email at Active Trend Trading.